What is up, people? Colin Phillips here. So, listen, I'm gonna be breaking down this whole SpaceX thing and telling y'all like how all this works. So, SpaceX and the AI stocks that are supposed to go like public. So, I'm gonna just show y'all like what's really going on with these, because like y'all need to know what these people are doing, right? So, SpaceX is valued at like 1.75 trillion. OpenAI is valued at 850 billion. Anthropic at 965 billion. So combined, that's more than Microsoft. But here's the crazy thing is that none of them are profitable. So SpaceX is burning money, Anthropic is losing 14 billion, and OpenAI is losing 17 billion per year. It's kind of like a shell game, if you will, right? So the way they report their revenue isn't exactly correct, right? So they're not accounting for the services that they have to pay. So like if they have their service on Amazon and whatever, some website, they have to pay them a commission, right? So like when someone signs up on Amazon, they'll pay them like 3% or something, right? But Anthropic is just like, oh no, we got all the money. We're not gonna count the part that we have to pay, right? Yeah, OpenAI counts only what they keep. So that's more of a correct way to do it. But you can both do it either way, but like that's $8 billion difference. You know what I'm saying? So Anthropic claimed 30 billion in revenue, but it's actually 22 billion. And then the other part is that Microsoft invested 13 billion in OpenAI as cloud credits. So, and then OpenAI spent those credits on Microsoft servers, right? So, it's like it's like someone gives you like I work at a gym, right? So, it's like someone gives you a free month pass and you're like, "Oh, I just got a $30 increase," and then you go to the gym and you give them the free pass, and then the gym is like, "Oh, we just made $30." It's like, nah, like y'all just flipping this around, bro. So OpenAI spent the credits. So Microsoft gives free credits to OpenAI, and then OpenAI uses the credits with Microsoft. So Microsoft, and then Microsoft's in on it too. So Microsoft counted it as revenue. So it's not like nobody's paid anything. They just, you know what I'm saying? Like they just. Here's the thing: is that like these companies are going public, so like people like fund managers and like retirement fund operators and like investors, they're trying to see like what all this news is about, like where is all this money coming from, right? So when Microsoft invests 13 billion, they're seeing these headlines and they're like, oh wow, this is really booming. But what they're not seeing is that like a lot of this money is just bouncing back and forth between these two companies. Like it's not really real money. It's like it's not like a customer paid, like we have so many customers that they're paying $20 a month. It's really just they're just giving them credits and they're just using it, and then they're just making headlines. It's like it's just free cloud services, so it's not really real revenue. So Alphabet, which is the company that owns Google, they posted 62.6 billion in profit, and Amazon got 30 30 30 billion. I can't even say that number. I'm just like 30 billion, bro. But here, like nearly like half of that is just them flipping and flopping the credits. You know what I'm saying? Like, so like it's really just a shell game. So these aren't real profits. So it's just like paper gains. It's just like an accountant just changing the numbers. So on paper, they've made it look like they're super profitable, but like their actual like cash inflow is not what it seems. Okay, and so you guys may have heard of like the dot-com bubble or like the market crash that happened in like 2008. This is what this really is, right? So these guys just keep raising, they're just literally raising the value of their company on paper. And then at some point, like they can't raise it anymore because they're not getting cash flow. And then they just file for bankruptcy and they just take all the money, right? So there's no real demand. Like these aren't like a contract with Google isn't demand. It's just like it's just fakery, you know what I'm saying? So the next part, and this is where see we've been talking about the AI, But this is where Elon gets pulled into it, you know what I'm saying? So this is where your retirement fund comes in, and that's where I gotta step in. So these three companies, they're about to IPO, and yeah, it's getting sketchy. So one of the main things is that there's called a fast track, right? So as I said earlier, none of these three companies are profitable, and so in order to get in the S&P 500, you have to like wait like a year, and you have to be profitable to get into the S&P 500. But but the Nasdaq 100 was like, oh yeah, y'all can join our fund. So basically, like, if you get listed on the Nasdaq 100, there's different funds that have to buy the stocks. So it's like a list of 100 different companies, right? And then these funds have to buy these 100 different companies. They're required to. Like you have to. So so the S&P 500 was like, y'all can't come in here unless y'all are profitable. But the Nasdaq 100 just fast tracked and was like, okay, yeah, y'all can just boom. So when a stock joins the Nasdaq 100, all passive funds tracking it are forced to buy it automatically. So you know what I'm saying? So if you have your retirement with one of these brokers who uses the Nasdaq 100, you're just automatically forced to hold SpaceX. So it's not a human decision. You don't you don't decide. It's just automatic. You have to buy it. And yeah, like that's pretty crazy, you know what I'm saying? Like they forcing you to use your retirement fund to do this. And then this is the other part is where the early investors they start dumping shares, you know what I'm saying? So the early investors of SpaceX, they probably paid like, let's just say they paid like 1 cent per share, zero point zero 0.01, right? So when SpaceX years later, when they, which is now in June or whatever, those shares are going for 135, right? So if you bought them for 1 cent, you're going to be like, oh, they 135 and they have to buy them? Oh yeah, we selling. You feel me? Like, you feel me? So all those people who have their retirement funds connected to this are forced to buy it. And then these guys who got it for 1 cent can just sell. You know what I'm saying? They just sell and it automatically buys. You know what I'm saying? So it's kind of sketchy. You know what I'm saying? So JP Morgan estimates if SpaceX went to the S&P 500, that'd be 14 billion in forced buying. You know what I'm saying? OpenAI would trigger 8 billion in forced buying, and Anthropic, aka Claude, could trigger 4.6 billion in forced buying. So S&P 500, they didn't let them in, but Nasdaq 100, the fast track rule enabled them to do this automatic buying. So yeah. So who gets hurt? Uh, your retirement fund, index funds, your 401k. So like people use these index funds or whatever to just passively earn money. So like if these companies are just losing money, but they're bought without like being really vetted, they're not profitable. They're just then these people are, you know what I'm saying? These are teachers' pensions, university endowments, anyone in the broad market, because like these funds are like SpaceX, they force you to buy it. So insiders have already cashed out at peak valuation. So yeah, like I was saying, if you bought it at 1 cent and it goes up to 135 $135, and then they force these people to buy it, it's just like like you can't. That's a rug pull, gang. Like, you feel me? And Nasdaq is in on it because S&P 500 was like, S&P 500 knows what's going on, but they wasn't. You feel me? So I don't know. I feel like Nasdaq. I don't know, bro. They're all in on it, bro. Elon, don't come for me, gang. Like, I'm nobody, bro. I'm in Arkham's Asylum. You feel me? Okay, so let me break down how this works. Like, real simple. You know what I'm saying? Unprofitable companies get trillion-dollar valuations. So none of these companies are making any money. They're all spending more money than they're making. So it's accounting designed to inflate the revenue. It looks good in the news lines. Oh, we got 13 billion from Microsoft. We're investing that in data centers. And so the index rules, so like S&P 500, NASDAQ, they changed their rules so that it forces, so they're letting these companies into the fund without being real profitable companies. And then so that creates forced buying, right? So early investors are use forced buying as their exit ramp. So if you bought in at 1 cent, you can use one of these funds to sell at $135 forced, you know what I'm saying? Passive income, passive investors become liquidity for the insiders. So like if you're just putting money in your 401k, you know what I'm saying? You know what I'm saying? That money is forcefully is used to buy this SpaceX stock, which isn't profitable. You know what I'm saying? So it's all legal. Hey, Elon, you ain't do nothing. You feel me? It's legal, bro. It's legal. Don't come for me, bro. I never wanted to harm myself in any type of way. So if this channel gets deleted, you already know. You know what I'm saying? But here's the worst part is that like retail and passive funds, like the retail investors, they get stuck. You feel me? Like they get trampled over. You know what I'm saying? So that's really what happens is that it's pretty much just fake numbers. They're cooking the books. If you're in listen, the bottom line is if you're in passive index funds, you're the exit liquidity for billionaires who got in early. So basically like the IPO game is designed to move money from passive investors to early stage insiders. So that's the game. You know what I'm saying? Basically, like if you didn't get in when it was 1 cent, just leave it alone. You know what I'm saying? And that's why these passive index funds or some of these ETFs and stuff, they're just not. You feel me? Like, and that's the other thing. That's why this is a crypto channel, finance channel, but you got to think if you're putting your money into a index fund or hey listen I'm not trying to hurt myself, you feel me, but think about it like this. If you held crypto, if you held some Bitcoin, you're in control of it. You know exactly what's going on with it. You can see the price. You know what's going on. Get you some hyperliquid, get you some H-bar, get some yield on it, hit the liquidity pool, you know what I'm saying? Like I've been telling y'all, hit the liquidity pool. Get right, get a little yield, a little 50% APR. You know what I'm saying? You feel me? But this is passive. So these people who are into these funds, they got this coming straight out of their paycheck. Like, you know what I'm saying, on their 401k. Oh yeah, I got a 401k, you know what I'm saying? They think they're all special because they got a 401k. I got a 401k. I diversified into index funds. Blah, 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 blah. Yeah, you're exit liquidity, buddy. You just got played, bruh. But anyways, listen, Elon, if you see this, man, I love Tesla. I would never want to hurt myself, but I know what y'all are up to, bruh. I know what y'all on, brain. I know what y'all on, gang. You feel me? So that's gonna be the end of the video. I hope y'all understand that, like, this whole, you know what I'm saying, SpaceX must be stopped. OpenAI, you're cooked. Anthropic, listen, Anthropic, they got some other stuff going. I don't know if y'all heard about Anthropic. They got an AI so powerful it can hack crypto wallets. I don't know if that might just be marketing, but hey, listen, they did it before, so. But listen, guys, that's going to be the end of the video. Hope y'all enjoyed. Hope y'all learned something. I'm going to holla at y'all later. Peace.